All right, we are live. Hello, everybody. Welcome to our June, I'm jumping the gun. Our June Thrive 2020 NoCo webinar. And today we're talking all about PPP updates, loan forgiveness, all that great stuff. And I am joined by the co-creators and founders of the Thrive Virtual Summit, Allison Profit and Shannon Richardson. And we have our panelists, Amanda, Kendall, and Kat Rico. And we're going to hear more about all of them in just a moment. But I just wanted to first introduce myself. My name is Melissa Kellogg-Lewick, and I am a coach. And I help women build businesses, women in all stages of business, to build and scale their businesses. And so I am going to pass off to Allison and let her do her introduction. And then we're going to jump right into the content. One quick housekeeping item. I want to make sure that you all get your questions answered. We are here for you. This is a work session to help you get all of your PPP and loan forgiveness, all that great stuff, all those questions answered, even planning business finances throughout the rest of this, COVID crisis and everything that's going on. So please put your questions in the Q&A box, and you should see a little Q&A on your screen somewhere. If you're on a PC, it's along the bottom. If you're on a smartphone, it may be located elsewhere, but look for that Q&A and drop those in there. So I'm going to pass the torch here to Allison, let her introduce herself and her business, and we'll get rolling. Allison?
Hi, everybody. Thanks, Melissa, so much. My name, can you hear me now? Yes. Okay, perfect. Thank you, Melissa. So my name is Allison Profit. My business is Profit Coach, and I'm a business coach. I focus on helping small business owners that are in service-based fields, coaching, consulting, things of that nature. I help them learn how to sell more authentically from a heart-centered place. I like to say that sales can be fun. It doesn't need to be stressful or slimy. And I am really honored to be a part of this Thrive leadership team with Melissa and Shannon. We actually met through the WeBo Network, which is a Women Entrepreneur and Business Owner Network. I'm the managing director for the Northern Colorado chapter. And so we're just really excited to just be resources to help entrepreneurs, whether you're a woman or a man, with this these continuation of the Thrive Summit educational series that we're going to be doing. And if you are a woman entrepreneur, I'd love to talk to you, or Shannon or Melissa, obviously our resources as well, but we would love to just connect with you and share more about how we provide professional education for entrepreneurs. So thanks so much, Melissa. I'm really looking forward to today's topic.
All right, I have to unmute myself. So I have the great pleasure this morning of introducing Shannon Richardson. She is, like I mentioned earlier, a co-creator of this event, and also will be our moderator today. And she is one of the smartest, most friendly, knowledgeable, intelligent women I know, and I feel so honored to get to know her and hang out with her and be here with her today. She is a financial advisor with Merrill Lynch here in Fort Collins. She's got over 20 years of experience with the financial industry. And with her background in business banking, lending, and retirement planning, she has such great insight for personal finances as well as business finances. Her passion is helping business owners realize success by looking at their entire financial picture on both sides of the balance sheet. And if you don't want to know what a balance sheet is, she's also a great person to ask about that. When not at work or serving various nonprofits in our community, Shannon enjoys traveling, not enough of recently, I hear, reading, abstract painting, and hanging out with her darling, lovable bulldog, Sarge. Shannon.
Thank you, Melissa, for the kind introduction. And speaking of the bulldog, if you hear snoring in the background, he is always next to me and typically snoring. So that's that's the age we live in, that now you get to hear my bulldog snoring in the background. So thank you, Melissa and Allison. Thanks everyone for joining us today. As Melissa and Allison mentioned, we held a summit back at the end of April. We wanted to make sure that we were getting timely information out to the business owners in our community with everything that was going on around the pandemic. And today's session is really a follow-up to our first session, which was on all things finance and cash management. We understand in the last 2 months since we held the virtual summit that a lot of changes have taken place amongst business in general, but also specifically around the finance picture. So we've got some experts today that are going to help us give us some updates around the CARES Act, specifically around PPP and the forgiveness piece. But this is also open for you to ask any questions that you might have around finance and cash management. So again, as Melissa mentioned, we just ask that you drop your questions in the Q&A box. It's either going to be at the top or the bottom of your screen, depending on your device that you're on. This is really an opportunity for you to get clarification and answers to those questions that you might have around anything around PPP, cash flow, things of that nature. So with that, I'd like to go ahead and introduce our panelists today. We have Amanda Kendall, and Amanda is the owner and founder of Elevating Profits. And she's been in the tax accounting industry for over 17 years. And 8 of that has been as a business owner and entrepreneur herself. So she can walk the walk and talk the talk around business owners. And Amanda really works with her clients so that they truly understand their numbers, because if you don't understand what your numbers are, then you can't really have intent in with your profit. So I know that in the recent months, Amanda has had a large focus on helping her clients navigate these new uncharted waters that we're all navigating. And she's a great resource and has a lot of insight around the CARES Act and PPP. So thanks, Amanda, for being with us today. And then finally, we have Kat Rico, and Kat is the program director for the Loveland Business Development Center. And I know that Kat comes from a heritage in her family of just lifting up the community around her. And I'm sure that's probably what led her to her passion in supporting and serving business owners in our community. So in addition to Kat having a very strong background in marketing and operations, leadership, she's also an enthusiastic and self-described geek. She loves all things sci-fi, gaming, tech. I mean, the girl builds computers. And speaking from personal experience, she is a great addition to have to a trivia team. So with that, I'd like to invite Kat Rico as our final panelist today. Before we get started with the Q&A, I just thought we'd give our panelists an opportunity for some opening remarks. So Kat, why don't you kick us off?
Yeah, so thank you so much for that introduction. Thank you for inviting me back. I'm excited to be on this call. There have been a lot of changes in the last couple of weeks, you know, actually in the last few months in general, in terms of disaster loan financing, what the requirements are, what programs are available, what the forgiveness looks like, everything like that. The pace at which the changes are coming has slowed pretty dramatically, which means that we're probably at the end of the period where they're trying to figure out all of the rules and everything. The most significant changes that have rolled out in the last couple of weeks here are related to the PPP program. So before I talk about any of those changes, though, I just want to remind all the business owners out there that if you haven't applied for the PPP program or the EIDL program and you still want to access those funds, those applications are open until the end of business tomorrow, June 30th. So if you're looking to access either of these programs, the PPP is available through your bank or through most micro lenders within Colorado are able to make PPP loans. So reach out to them. And then if you're looking for an EIDL loan still, that's going to be through the SBA's website, disaster website. And I'll link those in the chat once we kind of start answering questions and things like that. With regards to the PPP, though, the forgiveness aspect has changed pretty significantly. There's been some pretty good revisions to it. So initially, there was a requirement that 75% of the funds be used for payroll expenses, and they've dropped that down to 60% now. They've also increased the period during which you can use those funds from 8 weeks to 24 weeks if you received your funds before June 5th. And then loans that are made after June 5th are a 5-year term on those. And anything that was made before that June 5th date can be negotiated with your bank, because initially it was a 2-year term with a 1% interest rate on it. You can negotiate with your bank, but it's not automatic. So you do have to reach out to your financial institution to get that 5-year period if you received money before that June 5th date. There are some things that stayed the same with it. So still the remainder of your loan that you don't use for payroll expenses has those 4 main qualifying uses of rent, lease payments, utilities, and interest on debt. You can't, if you want the full forgiveness, you can't reduce the number of hours for your employees from pre-crisis or pre-COVID. So that's the FTE rule. Wages can't be reduced by more than 25%. And then the EIDL grant does reduce the final amount on your PPP loan forgiveness. They have released a couple of different applications for the forgiveness. So if you are at the point where you're ready to start applying for forgiveness, there's 2 different forgiveness applications out there, although your financial institution may have a separate application that they've developed internally. The ones, though, that have rolled out from the SBA, the simplified version, it's the, let's make sure I get this right, it's the 3508 EZ application. And really, if you're self-employed with no employees, or if you have employees but you didn't reduce their salaries by more than 25% and didn't reduce the number of hours worked, or if you have employees, didn't reduce their salaries, and you were unable to operate during the covered period, you can use that EZ application as opposed to the longer application. And I'll make sure again that I link the full application, the EZ application, and the instructions in the chat on that. Regarding the EIDL loans, again, those are still available through end of day tomorrow. Apply on the SBA disaster loan website. It's opened up to all businesses and all industries. So if you do need access to those funds, certain nonprofits do qualify, certain faith-based organizations, agricultural businesses, and most other small businesses are going to qualify for those EIDL loans. So yeah, I think those are the 2 biggest things that I wanted to just kind of head us off with, or start us off with.
Thank you, Pat. And I know, Amanda, I'll turn it over to you. And I think you were wanting to touch on the easy form versus the full form as well. So I'll let you kind of piggyback off of Kat's opening remarks on that.
Yeah, so I think Kat hit all the highlights of it. I mean, if you can qualify for the easy form, it's like half the length of the regular 3508. And Kat, I did drop those links in there for us as well, so that those are in there. But so yeah, I mean, I think Kat hit that perfectly. The other change that we saw was the payments were scheduled to start initially 6 months after you received the monies, and now it's 6 months after the time of forgiveness. So you do have a little bit more leniency there, and when you do have to start repaying any portion that's not forgiven. And then one of the things I wanted to make sure we touch on today is how this all looks in your accounting for your business, because the IRS has been very adamant that any expenses paid for under the PPP are not deductible expenses at the end of the year when it comes to filing your tax return. I haven't seen anything coming through that's even on the table for talking about change. That doesn't mean that couldn't change, but right now that means that when you're looking at bookkeeping from a bookkeeping and accounting aspect, you have to do some very specific things in your books around this to be able to really see the full picture, because you want to see those expenses that you're paying still, but you want to make sure they're not hitting your profit and loss at the end of the year as a final expense, because I really do believe this is going to be a highly targeted area for audits for any businesses that receive the PPP, because they're going to really be watching for double dipping on these expenses here.
And can you talk a little bit, Amanda, about this new delay in paying payroll taxes that wasn't originally allowed under the CARES Act, but now it sounds like that is being allowed?
As far as the payroll tax deferrals? Yeah, so I don't know if there've been any updates in the last week or so on that. I haven't seen any come through, Kat. I don't know if you've seen anything on that from your angle. So essentially, the payroll tax deferrals are something that you can use, and there was a lot of misinformation out there initially that I've tried to, like, where I see it, I try to correct it. But initially, people were like, you absolutely cannot use both. And yes, to an extent, that is completely true. But the way the law reads is that you can use the payroll tax deferrals up until the point that the bank actually says, yes, your loan's been forgiven. That's the point where you can no longer utilize both. So for some businesses, especially if you have a really, really large payroll number going out, you can defer some of these tax payments to further help your cash flow and keep cash in your business. You're not getting rid of them, you're just kicking the can down the road. But honestly, right now, when we're talking a circumstance like Shannon, you and I had this conversation last week, a circumstance where business, like, we don't know what the future of this is. Like, I truly believe that the long-term outcome and the long-term effects of this on business, we're still going to be starting to see just the final rollout of how it's affecting businesses 18, 24 months from now. So I've talked to a lot of people that are like, I don't need the funds, I'm doing okay now, or I don't need the funds, you know, whatever their reasoning is. And I really want to counter that with, you don't need the funds now, but unless you have a crystal ball, you have no way of knowing if you're going to need these funds 6 months, 12 months, 18 months, 24 months from now to make sure that your business survives the long-term effects of this. So even though that payroll tax deferral is just kicking the can down the road, if you can kick that can down the road and keep, you know, potentially several $1,000s in your business, why not do it?
Absolutely. I mean, when we're talking about, you know, cash flow just being king in business, if you can just make the payments you absolutely have to now and defer what you can, 100% agree on that. Would either of you like to try to tackle maybe just kind of a bullet point or a checklist of what you feel that business owners will want to gather in order to start preparing for the loan forgiveness? I know, I think the suggestion would be that you go to whoever your PPP lender was, because although the forms are available on the Treasury website, that will give you an idea of what you need to gather, but your individual institution may have their own proprietary form, or they might be doing that digitally to where they're not going to want you to use that paper form. So can you maybe just give the folks on the line an idea of just generally what they would want to gather, regardless of what form they're going to be completing?
Yeah, so to start off with, obviously you're going to want to gather any documents that you submitted with your PPP loan, because really those are going to be pretty crucial, and it's going to make it a lot easier to fill out those forgiveness documents if you have those original, the supporting documents you submitted with your PPP loan. I think that's probably the number one thing. And then number two is documentation on how you use those funds. Because you are going to need to include some of that information, and you're going to need to reference that as you're going through and filling out the forgiveness application, whether it's a proprietary one or the easy one or the standard application for forgiveness.
Amanda?
Yeah, so I think the only other piece that I would recommend, and something we've really been focused on with our clients that we're assisting through this, is that accounting piece, because I truly think the banks are, in addition to everything Kat mentioned, they're going to want to see the accounting of this. Yeah. With that, the way, and I'll share a link before we wrap up today, but I've done a YouTube video on exactly how you should be putting this specifically in QuickBooks if that's the software you use. And if you do it the way I recommend, you can literally print out one report that's going to show everything that came in and exactly where that money went out and how you're accounting for it. And I think that's, I don't know that they're necessarily going to specifically ask for it in that much detail, but in my opinion, if you can provide them that, this is one of those situations I truly feel if you give more than they're asking for, it's going to make their job easier, and it's going to make the process easier on you. So that's one thing that I would recommend, is just having that clear accounting trail as well.
Well, yeah, to go back to what you said earlier, Amanda, about the high high potential for audits on this information, not just having that really well laid out for your bank, but also in case you do get audited. You know, it's one of those preparedness things that, you know, yeah, you're not going to be filing your taxes until next year, but having that information on hand is going to make it that much easier if you do get audited. Because, you know, what you mentioned about the whole double dipping, we heard that from the very beginning from the SBA, is that they're going to be watching these programs very closely. And, you know, it can get really bad for business owners if they are double dipping on this. So having your ducks in a row and everything on paper in a row is going to be really important just from a liability standpoint for yourself.
Yeah, and I think this is just my gut thought, but I think a lot of these audits from the IRS end are initially going to come out as just letter audits, where they're going to say, hey, can you show da 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 da, and that's going to be a step towards that. And if you don't have the ability to show that through excellent accounting records, I think the next step is going to be scheduling an appointment at the IRS office for a full-blown audit. So this is going to be very beneficial in both of those aspects. Absolutely, Kat.
Yeah, I was looking at just some suggestions that different organizations are making on the accounting piece, and you know, they're talking about collecting payroll for certain time periods. So you got to have like your look back period, you know, January to the end of March, what your reduction period looked like, you know, February 15th is kind of that baseline through the end of April. What's your snapshot on February 15th? Because I think, right, they're using that date as kind of the baseline for everything. What your payroll was during your covered period or while you were spending the PPP money. And then for those that are going to expand that 24-week period out or spend it over that period of time, what it looks like at year end. So there's definitely a lot of different time periods that need to be organized just in case, right, for this audit. And I think, Amanda, the tool that you're going to share with us, that would help them in organizing that, right?
Yep, and I did just drop that link in there. It's just a YouTube video, and I will tell you, if you're in QuickBooks, like play and pause and do, and play and pause and do, and it's going to walk you right through exactly how to put all that in.
Yeah, that's great.
The other thing, kind of going back to something Kat mentioned and kind of jumping back a little bit, is that 8-week window that we initially started out with when this came out, and then extending that to 24 weeks. I've seen that be a huge benefit for some of our clients that, you know, they have payroll, but they may be the only one on payroll through like an S corporation that they have, and they work out of a home office, so they don't have a lot of the rent and utilities to account for that extra 0.5 on the 2.5 calculation. And so we were looking at these numbers, and a lot of these clients are like, well, I'll just increase my payroll to hit that full amount. And I'm like, but you can't, because if you increase your payroll, now we're over that $100,000 per employee for the year, and we're automatically going to have a portion unforgiven based on that. So if you're in that boat where you have that 2.5 times average payroll calculation, you're your only employee, you don't have those other expenses, I want to encourage you to utilize these extra weeks to maximize that forgiveness portion there.
Yeah, that's great advice. And then there's also the 2 new exceptions. If a company wasn't able to fully restore their workforce, do one of you guys want to touch on that?
Well, there's the FTE calculation, and then there's the wage calculation. So, but there's also, if you have invited employees back or asked employees to come back and they're not able to come back, that's where things can get really, really tricky. Because if they're coming, or if they're not coming back for valid reasons related to the CARES Act, in terms of like maybe they don't have childcare, or maybe they have someone in their household that's being tested or diagnosed with COVID, those are valid reasons that they won't come back to work. And that actually doesn't count against you for some of the forgiveness. But again, documentation, and that's from the HR side of things. So it's not accounting documentation, but you should be sending some kind of a letter to your employees, a physical letter, to document that you've offered them a job, and then anything that they give you in response saying, hey, I can't come back to work, or I will come back to work, but at reduced hours or whatever. Just make sure you're also documenting that, because that can come into play as well. And if you have questions about that, just a plug for our consulting. We do have several consultants that are able to meet with you free, confidential, one-on-one to discuss any of those documentation needs on getting your employees back to working for your business or making the right allowances for them.
Yeah.
And they are that if a business wasn't able to restore fully their operation due to restrictions from COVID. So for example, a restaurant that has to be at 50% capacity, they're also able to meet that exception, right?
Exactly. Yeah. And that is part of the third thing. And actually you can still use the easy form if you're seeking forgiveness, even if you weren't able to restore operations, whether, like some of our event venues, restaurants, gyms, things like that, they're barely able to start opening up right now. So
Right.
it definitely applies to them.
Yeah, and there was a little thing in there, and I realized a lot of people are kind of looking at that and saying, oh, well, customers just didn't come back. I'm able to operate, I'm able to work, but our customers just haven't returned. And there is a specific statement in there that's like, that unfortunately is not going to qualify for this. There has to be a COVID related reason, not just that the demand for your product or service decreased because of this.
Yeah, and I think, that's a great segue, Amanda. Kat and I were talking last week just about the volatility of the consumer markets and how a pandemic and, a global health crisis like this changes consumerism. So what advice would you give to business owners as they're having to navigate or make adjustments in their business based on a changing consumer market?
I think it goes back to the word that we've heard and used and maybe been sick of over the last several months, and it's pivot. There is and I hate to use that word because I feel like it's so overused right now, but realistically, I mean, going back to that whole long term, like what's going to happen 18, 24 months from now, I unfortunately think there's going to be some business models that were thriving before COVID that are just never going to fully recover and come back with the demand that they had before. So if someone finds themselves in a situation where they're like, oh, the demand just isn't there anymore, it may not be a situation of you just need to sit and wait it out anymore. It may be, okay, what were we doing? How can we shift this to continue working within our realm of expertise, but giving something out to the consumer market that's going to be absorbed and desired right now?
Right.
It's really just going to be a shift.
Yeah, we know during recessionary periods that consumers continue to purchase, essential items, but they tend to cut out any discretionary spending and their overall intent of spending decreases. So, the other thing I think too is that the consumer market's, it's shifting to where it's online and digital. And so maybe Kat, you can speak to that of, consumers want to have an option to, research, purchase, return if needed items online or with reduced contact. So what thoughts do you have on that?
Yeah, absolutely. So a lot of our businesses that adapted very quickly to the pandemic and the closures and everything related to any of the restrictions that we've seen in the last several months, I would recommend that they take a hard look at their marketing right now and come up with an adaptable marketing plan. So figure out, first and foremost, did your target market change? Because there's a chance that your target market changed either their behavior patterns or maybe even just the general demographics of your target market changed. So start there and then see, okay, now are there delivery methods that I need to change or I need to kind of brush up and make stronger? Because we saw a lot of, like, for instance, a lot of businesses rolled out an app or a lot of restaurants rolled out an app for the first time for their online ordering or something like that. And they did it very quickly, which means that like maybe the SEO behind it isn't solid. So they need to go back in and look at that and then make sure that it is going to be something they can use long term. Because again, going back to that volatility comment, we don't know if we're going to end up in a spot where we have to kind of roll back these reopenings. So now's the time to go and look at those pieces and make sure that they're ready. So if you do need to lean on them again, you have them in your toolbox. And that digital online communication, I think the one commonality that I have seen for businesses that have come through the pandemic strong is that they have a good online channel to communicate with their customers. That doesn't necessarily mean Facebook. It may mean that their website is on point. It may mean that they've stepped up their email marketing. There's all kinds of different pieces that kind of play into that. But communicating with your customers, letting them know what you're doing to help your business stay open and keep them safe at the same time, letting them know that you're still there is extremely important, because there's just this wonderful community of support for small businesses in Northern Colorado. Your customers want to see you survive, but if you're not communicating with them, they don't even know what's going on. So keeping that open is going to be extremely important.
Right. And I think too, Kat, we've had the conversation of, some really amazing collaborations that have happened in Northern Colorado. And so even just understanding, you're talking about, has my target or niche, market, has that changed, but also how can you reach out to those folks? And so collaborating with another business so that you're able to both reach that target market. Do you have an example of some things that maybe you've seen happen in Northern Colorado?
I've seen some small food product companies that are kind of banding together with some local restaurants so that their products can be delivered through the restaurant. I've seen some like musician and restaurant pairings that are really starting to pop up, where they're trying to get creative with some events and things like that. Delivery services where they're trying to do more local products that are being delivered and things like that. And then businesses that aren't even necessarily in related industries, but they're complementary to each other. Just kind of coming together. So it's really interesting to see all of that develop.
Yeah. So Amanda, earlier you were alluding to just, I think, and I share these thoughts with you, just the long-term impact that we're going to see business owners experience from the fallout from the pandemic. And one of those things, well, and Kat and I talked about this too, but we would expect their cash flow to be affected, for the next 3 to 5 years. So what kind of advice are you giving your clients right now when kind of trying to project that out?
So I think the biggest conversation we've been having around this is with the EIDL loan. I've had a lot of business owners. I work with a lot of business owners who pride themselves on operating debt-free, which is phenomenal and amazing in today's economy. And so they're really hesitant to take on this debt, especially when they're looking at, some of them receiving 6 figures on this loan. And they're just very hesitant because they're like, well, I don't need it now. Going back to that conversation of I don't need it, so I'm just not going to take it because I don't want to take on the debt. And so it really is that conversation. So the big thing we've been doing with our clients is forecasting, like, okay, what does this look like if you don't take this debt and things continue, with a small increase over the next 2 years? What does that look like for you? Versus if you do assume this debt, what does that look like for you? And I think the biggest thing that we've been able to show our clients through that forecasting option is really looking at, okay, like you're still only maybe at 50% of revenues compared to where you would normally be this time. And yes, it's getting better and you're having a little bit of an increase every single month. So if we continue looking at that slight increase, we've got maybe 7-8 months before you're operating in the red with cash flow. And you can operate not be profitable for years, but if you operate without positive cash flow, your business is going to die within months. And so really just looking at that long term. And I think with everything going on, I think so many business owners have stepped out of that long-term vision because it's so uncertain and they're living in the here and now and the today. And they're like, well, I don't need it today, or, oh my gosh, what's happening today? And it's really just pulling them back into that long-term focus of what does this truly look like? Like, yeah, you're making it this month and you might make it next month. But if this continues, what's going to happen in December when maybe you're in an industry where spending slows because of the holidays? Or, maybe you have a seasonal business and we're looking at 3 months of no revenue, but you still have expenses. So just really pulling them back to look at that bigger picture again, where I think a lot of business owners have stepped into such a small window of time that they're looking at because of crisis mode.
Yeah, absolutely. Kat, did you have something you want to add to that?
I absolutely love what you just said, Amanda, because it's so true, and it's hard and it's challenging for our business owners right now, because not only are they, do they have all of these cash flow huge issues on their hands and on their minds, at least in the back of their minds, they've also got compliance issues. They've also got HR employee related issues and workforce issues and trying to get people hired. And then there's the marketing piece of it. And then there's just the general consumer uncertainty. So it's easy to push one of those concerns off, especially when, with reopening restrictions and things like that. Those are changing still on a very quick basis. So it can kind of feel like your head's underwater sometimes as a business owner, but that's where having a strong support network of people who can help advise you in some of your blind spots, like cash flow projections, is extremely, extremely important.
Yeah, absolutely. And we had a few questions coming in while we were talking about, the cash flow piece. And one question was, if we do need to be looking at long-term, what's the time period we should be planning for? And I think, again, it's kind of that, I would say 3 years is kind of your minimum. I mean, as far as if you're looking out for financial projections, but, I would say probably 3 to 5 years. And you want to, like Amanda was saying, you want to look at if these trends continue, if everything just stays the course where we are right now, what does that look like? If we were to experience another shutdown, now you've kind of experienced that, so you know how it affects your numbers. What would that look like? Again, it's really the good, the bad, and the ugly is what you need to put together in your projections. And like Kat said, maybe doing financial projections is not your strong point in your business, but there's so many resources out there to help you with that. And, the Loveland Business Development Center and the other small business development centers are a great resource for you to be able to work with a consultant one-on-one to help you put those projections together. So let's see, we've got some more questions coming in. What should our support advisory network be looking like now, so we're not risking those blind spots with projections and compliance? I think for a business owner, you think about like your circle of advisors that you have around you. We absolutely should use all the free resources that we have available to us in Northern Colorado, through the SBDC centers. But you also would want to make sure that you have a professional like Amanda that can help you on the tax and accounting piece. You'd want to have a business attorney that can help you with all the legal issues. And then someone like myself, on the financial advisor, that once you're kind of creating this plan, if you implement that, how will that affect your financial plan overall, not only for the business, but personally? So those would be my suggestions. What do you ladies think?
I completely agree. I think with the accounting piece, I can speak most familiarly. I might have just made that word up. I don't know. I'm most familiar with that area. I think on that piece, I think now is the time to deepen that relationship with whoever that professional on your team is. It is, unfortunately, the accounting industry is so, I don't know from the inside of it, but from the outside of it, I think it's so seen as a historical thing. We're plugging in numbers that have been, we're looking at taxes based on what has been. And I think that relationship right now, if it's more important than ever before, is to deepen that and start looking at what ifs and what can be and what may be. It's not just about what you did last week or last month or last quarter. It's now about, okay, what did we do? How do we make tweaks and changes to what we did do, what we are doing, to really focus on, that cash flow piece, that tax savings piece, the planning aspect. I think deepening that relationship now is more important than it ever has been before, because that's going to go a really long way in keeping cash in your business.
Yeah, absolutely.
The two that I would add, the two that I would add to that, and this is based on what we've seen happen with the pandemic, be friends with your banker. Know who your banker is, because the people who got assistance, the businesses that got assistance first through this pandemic, through all of these programs, were the ones that had a relationship with their banker. They knew who to call, and their banker knew to call them. So really making sure that that relationship stays strong, and that's going to be absolutely crucial, just depending on what happens in the next 18 to 36 months. And then also, I would recommend that people consider adding someone to their advising team that is in marketing and branding. Typically, that hasn't been something that we've really emphasized a whole lot, but considering the need for adaptable marketing and the way that digital marketing is changing, having someone that's keeping their finger on the pulse on those changes that can help you with your specific business will be helpful long term.
Yeah, those are great.
Yeah, if I can piggyback on that marketing piece, I think that's huge. I like that you said that, because that wasn't even one that had really clicked with me. But I think what business owners need to be aware of is you're not looking for the cheapest service in that arena, unfortunately, because what's going to happen now is that we're seeing such a pivot in that industry in general, and the way what's working and what's not. I think we're going to start to see a lot of people jumping into that industry because it's where dollars are going. And so if you're looking for the cheapest service there, you literally may end up with someone that just hung their sign out on the door last week, and you're their beta client. They really don't know what is or isn't going to work, but your money's going to pay for their experiment.
Right. And especially with everything going, digital, folks need to have e-commerce set up if they don't already have that set up for their clients. So yeah, absolutely. And 100% agree on the banker. And I'm surprised being a recovering banker, I should have mentioned that. Yeah, and I think too, because if you've been a business owner through the recession, you would have experienced some of this before. But what you're going to find moving forward is that the banks are also going to be managing their risk, and not that lending is going to come to a complete halt, but you're going to find just a tightening around underwriting. And you're probably it's already happening in the mortgage industry. It's already happening with business lending. So it is really important to have a relationship with your banker, but make sure that your banker is someone that is well versed in understanding business financials and how the underwriting works for their institutions, because there's going to be, it's going to get a little tough, I think, for folks to get access to capital. So, and I think most banks are of the opinion that with everything going on, that they're really concentrating on working with their clients and not so much prospects new to the bank, because it's the whole KYC, know your customer rules that they're under, that they're wanting to make sure that they're taking care of their clients, and they already know those clients and kind of what trends they have in their business and what their financials look like. So yeah, it's gonna be really important to have those conversations with your banker. And what does this mean? I was getting ready to purchase equipment or a new vehicle, or I was gonna ask for a working capital line to help me with my seasonality. You need to have those conversations with your bankers to find out where their institution stands on extending new credit at this point.
One thing that everything around the PPP and CARES Act has made very, very apparent for a lot of my clients is I truly think it's important to have a couple different banking relationships. What we found is some of those business owners that have all their accounts with this big box bank maybe got overlooked, or the ones that had it all with a very small local credit union, missed the first round of funding and had to catch the second round. So I truly believe you need to balance that relationship as well with maybe a well-known national bank and a small local credit union, so you can really utilize whatever options are available across the board.
Yeah.
Excellent point.
So just speaking of pivots, you know, whenever I hear the word pivot for anybody out there who's also a fan of the show Friends, I just always think of that scene with Ross when they're carrying the couch and he's like, pivot. So I feel like it would be funny. Maybe we'll post that pivot meme out there on the Thrive Facebook page for folks, because, you know, we got to find things to laugh about, right? So a couple of questions have come in while we were chatting. What are some other financing and or grant programs that business owners should be considering and looking for? I know we shared some thoughts on this in April when we had the original finance cash management session. My suggestion was to go to the Choose Colorado website. It's a spinoff from the Office of Economic Development, but they've got a list of all of the local, state, federal, even private grants and loans that are available. So I think that's a pretty kind of condensed, it's all in one place website to go to. What about you ladies? What are some thoughts on that?
Kat?
I think, you know, keeping up with that Choose Colorado site, there are those alternate funding sources. Keeping in mind too that there are new programs rolling out on a regular basis. Sometimes by the time they're discovered and added to that list, they're already out of funds, just depending on what type of funding source it is. If it's a grant, you know, those get exhausted pretty quick. But that doesn't mean that there's not more available or more that will come. But just knowing that it's very uncertain. Those projections that we've talked about a couple of times, the good, bad, ugly projections, are going to be invaluable to you. Yes, it's not going to put money in your bank account, but knowing and being able to anticipate what you might need, that way hopefully you can see just an extra 6 months down the line can make the difference between your business being able to survive and weather this and not. There is also the Main Street program that has come out recently. I am not very well versed in the mainstream program, but it's at least available as another source of funding that's come out. So
yeah, and just to make sure everyone knows that it's not like the PPP, the Main Street funding. You still do have to show that you can service that debt. So you'll have to have the debt service coverage ratios that are required for traditional financing with the bank. But we can definitely post a link to give you, because there's 3 different programs, you know, for different size companies. So we can post that information out on the Thrive Facebook group if you're interested in learning more about that. We're coming down to time. Went so quickly. So I wanted to just give our panelists an opportunity to make some any final remarks or some things that maybe they wanted to make sure to share today that we haven't talked about. And then also, I know you have both, you've both mentioned kind of a share that you're going to give to the attendees today. So if you wouldn't mind just repeating that information and providing that for our panelists. So Amanda, I'll let you go first.
Yeah, so the main thing I wanted to share with everybody today was really that YouTube video, especially if you're in QuickBooks Online. It's going to walk you through step by step. If you're in any other accounting software, you should still be able to pull the steps out and understand what to do. But I think that's the biggest thing, is I want business owners to understand, like, if you're not doing the books right around this piece of your business today, it could have effects that you're going to see for 3 or 4 years down the road, because like we said, audits and the forgiveness aspect and all of it. And in addition to that, if you did take an EIDL loan, you know, they have the right to come in and ask for books and records really at any point that they see fit. And this is not a situation where in that moment you want to be picking up the phone and calling people being like, oh my gosh, I need 2 years of my books and records caught up because I haven't stayed up with this. So that's what I wanted to share with the group. And then if anybody does need assistance with that forecasting piece or anything, I'm more than willing to talk through what that would look like and how we can assist with that, because it really is, I think when people hear forecast, they're like, well, I just take my profit and loss and move it out a year and a half. And I'm like, that's not what true forecasting is. You have to look at different scenarios. Like you said, the good, the bad, the ugly. And, you know, we just did one for a client last week that's like, I think I might be adding on this service. And so we actually went through like, what would it cost to add that in? How long would it take to build that up to being profitable? And ran some forecasts with adding that in and with keeping it out. So it's really important to understand all the nuances of that if you're looking at forecasting.
Thanks, Amanda. That's great. Miss Kat?
So two things that I just want to highlight. So first up, the Loveland Business Development Center and the Larimer Small Business Development Center, along with East Colorado SBDC and Boulder SBDC. So depending on where you are, reach out to your local Small Business Development Center. If you're concerned that adding some of these professional advisors that we've talked about are going to hit your cash flow even harder, because, you know, that's what we're hammering today, right? Is that cash flow, cash flow, cash flow. And you want someone to help you organize your thoughts or pick out some key questions to ask advisors. The consulting really is invaluable. We have a whole team of consultants that was activated right at the beginning of the shutdown, right on, I think March 16th was the first time we met. And so they've been there from the beginning of this, and they've gone through all of these different programs and the changes and stuff, and worked with many, many other business owners to help them with that free confidential one-on-one consulting. It doesn't get much better than that. So I've linked both Larimer and Loveland's websites so that you can access that consulting for free. It's incredibly valuable. And then also check our websites, because there is a lot of information on there. And like last week, we did this marketing series with the Fort Collins Chamber, Larimer SBDC, and Loveland Business Development Center. So we'll be posting up the links from that marketing series. You know, those are great free tools that are available that can really make the difference and help you really think about your business differently and shift what you're doing.
Thank you. So I always like to just close these sessions with some tips. So that's going to be my closing remarks for today. So I wanted to talk about how business owners might be able to optimize cash in the short term, because it's really, when we're talking about surviving through the pandemic and a recession, you've got to be able to be agile and be quick on these things. So the first thing I would say is figure out what your best tactics are on how you collect and spend your cash. You're going to have to optimize and prioritize your receivables and your payables. And that also means optimizing and prioritizing your inventory. And I know that's way easier said than done, because we're in this ever-changing demand environment. But just really keeping an eye on your inventory so that you can optimize how you're handling those orders. We've hammered this home a lot, but creating those projections. So working with someone through the SBDCs that Kat's offered, or Amanda's also offered with Elevating Profits, to help you with creating those projections, specifically downside scenario models. And I do like, Amanda, what you said. And I think also, if you are pivoting and offering and thinking about implementing a different service, being able to include those into your projections and see what the runway is on that. So I really liked what you had to say there. Just knowing what your cash numbers are, what's your cash position today, how much cash do you have on hand, what availability do you have to your credit lines, and when you're looking at those downside scenarios, what kind of runway does that give you with that cash? So if we did go into another shutdown, how long would that cash, what kind of runway would that cash give you? And just always have a mindset around the question of what is the impact of my business over the immediate term. So thinking about that. I said this earlier, but I had it on my list of tips. Make payments when you absolutely have to, and defer when you can. You know, in the last session, we talked about having those conversations with your vendors and your landlords. I'm certain those are already happening. So I'm sure you're well on your way and figuring out how to manage that. Also very important is just reduce your costs as much as possible. And I think the easiest way to do this is just listing out, you know, fixed versus variable. Your fixed expenses, you know, your mortgage or rent, your utility payments, usually salaries, but that might be a little bit of a variable now. Insurance, those are fixed. And then looking at your variable, and those variable expenses are the ones that fluctuate with your sales. Those are going to be the easiest ones to cut. So tackle those first, and just cut everything that you don't need so that you can run lean. Next, I would say prioritize generating some quick cash. We alluded to this earlier. Kat was talking about some restaurants who, you know, immediately went on to offer, you know, online delivery and things like that. But I think a lot of businesses offer like e-gift cards, but it wasn't a huge revenue stream, or you didn't really spend a lot of time marketing towards like the e-gift card in your business. But that's something that is easy. It's low cost, low effort, that can generate some quick cash for you. And then along those same lines, just figuring out how to communicate with your existing and loyal client base and offer exclusive discounts to get them re-engaged in purchasing your products and services again. I always think about reaching out to mentors in the community. So if you know other business owners who went through the recession and they were able to survive and thrive through 2008, 2009 and on, reach out to them. Ask them what they did and what changes that they made in their operations to be able to survive. And then we already talked about just checking out any kind of local, state, federal, private resources that might be available. And I'll finish with this. This is kind of more in my area. You know, as a financial advisor, we always want to guide our clients on what the best course of action is if they do need to access their own personal assets. So there could be an opportunity if you have a cash value life insurance policy that you could withdraw or borrow from that. Again, you always want to speak with your accounting professional, someone like Amanda, to talk about whether or not that's going to come to you tax-free or if there would create a taxable event. And then as a last resort, you can tap into your retirement plan assets. The CARES Act did pass something to where you have temporary access to retirement savings up to $100,000 without incurring the 10% penalty. And if you repay that within 3 years, you might be able to avoid any type of income tax. So again, speak to your financial advisor, speak to your tax accountant before making those decisions. Don't make emotional decisions. Make sure you're working with your advisor so you can make the best and most informed decision for you and your business. So, so my give today for our attendees and those on the line would be just to offer a free planning session, a financial planning session, whether it's reviewing the one that you have currently and making adjustments and just helping you get a second opinion, or if you don't have one in place, helping you create one so that you at least can see, you know, a plan overview that usually gives you some sense of peace. So with that, that was a lot of information. I want to say thanks again so much to our panelists. Thank you, Kat and Amanda, for joining us today. Please take them up on their amazing offers that are in the chat box, I believe. So you should see that along with our contact information. If we didn't get to your question today, please do reach out to us. You can also go to the Facebook group. That's also been included in the chat box. And you can drop your questions in there or ask for contact information for any of our speakers today. And we just hope that you guys were able to take some good nuggets of information away from the session. And we will be hosting future sessions through follow up on the Thrive NoCo 2020 Virtual Summit. So be on the lookout for some upcoming sessions. And with that, I would just say, please stay healthy and optimistic and take care of yourself and your loved ones. And we look forward to seeing you all hopefully very soon. Thank you.